9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Let's get to your top stories today. Asian stocks slipping. These are from record highs, of course, as investors assess mixed signals about a deal to end the war in Iran and also reopen the Strait of Hormuz.
Chip giant CXMT heads for China's biggest IPO since 2022 after getting approval from the Shanghai Stock Exchange.
Also ahead, ByteDance said to be planning a sharp increase in capital spending this year to lead the Chinese AI markets.
Plus, AI and the broader investment climate in focus as we speak to a big lineup of guests at the UBS Asian Investment Conference in Hong Kong and Beyond Expo in Macau. Welcome back, David. You haven't.
Happy to be here.
It's the
Always.
same sort of themes that we've been talking about since you last left, right? Whether it is, of course, the macro risks out there, what the BOK has been flagging the last couple of minutes, a little bit of that hawkish hold that we saw, with the flavor of what we got from the RBNZ yesterday, and then, of course, the tech theme continues here with now China seem to be trying to play in this whole chip theme with CXMT and that IPO.
Well,
coming up.
was barely able to take a minute during the holiday, not thinking about, because you had these headlines crossing, right? $1 trillion for Micron, SK Hynix. I was waiting for this potential off-cycle hike coming through from certain EMs. We didn't get one, though, from Korea, although the direction of travel does seem to be on the upside there with the bumping up of inflation forecast and growth as well. So lots to get into, of course. Equity markets are not doing a lot. They have done substantially a lot, of course, over the last 3 days or so. Just to watch that, and of course, within the Taiwan market, just to mention AI, right? TSMC talking about the similar conversation we had around Korea on these bonuses.
They're distributing the wealth a little bit, right? The haves and have-nots. In terms of the haves, they're trying to see, maybe a bit more bonuses to help out with, of course, this booming AI sort of growth that they've seen, right? And certainly that leads to a lot of discussions about this sort of economy that we're dealing with. One that is very much AI-driven, and the other side of it, which is, of course, the K-shaped sort of things.
Yeah, and we're seeing that in China too, right?
Yeah.
When the direction of travel on yields there has been clearly to the downside recently, and I think we're very close to taking out a low on the 10-year yield. It was also one of the things I was watching on the flight back, really, the 10-year yield, the CGB in China, 1.73%. We're looking at, of course, one part of the Taiwanese market that has been a reflection of this broadening out of the AI rally. And also just to mention, of course, the latest on Iran, with, I think, currently Brent price is actually seeing some noticeable upside in the Asian session, given, of course, some of the strikes that we're seeing in that part of the world there.
Yeah, there's still a bit of doubt, I guess, from the president here about what sort of deal can be actually reached between the two. So certainly that has lingered here. But when it comes to oil markets, we kind of shifted more towards the $90 sort of side of things than the 100.
That's a good thing.
Which I think we haven't been able to break above 100, even despite when things are escalating a little bit by the margins. So that could be at least good news. But as you mentioned, I think much of the region is closed today, right? Yeah. So you've got India, Indonesia, Pakistan, most of the Middle East as well. So certainly that's one thing to deal with as well. Let's get to the latest when it comes to Iran. Because we have been kind of tracking U.S. forces, which have launched airstrikes on an Iranian military site, with a U.S. official saying that the attacks were defensive and intended to maintain the existing ceasefire. Now, the official says Iranian attack drones that were fired at a commercial ship were shot down.
Now, earlier, President Trump asserted that no one nation would or should control the Strait of Hormuz. He also said that the U.S. will watch over the strait and ensure the free passage of these vessels. Right, let's tie everything together. And joining us here on set, Anthony Stevens, of course, our Bloomberg Markets reporter. And why don't we start with this rotation that you've been flagging?
Right, so we saw oil drop on an absolute basis 5% last night, right? It's coming back up a little bit, but that drove a whole bunch of rotation into consumer space. The consumer space in Europe, in the US, has been lagging tech really badly because consumers are struggling to pay for goods with these kind of high gas bills. That thematic can unwind a little bit and start to see consumer names trade better. You saw the European luxury index up around 3% yesterday, as the SOX index, the semiconductor index, pulled back around 1%. That trend is feeding into the Asian session to start. We're seeing automakers in Japan and Korea trade really quite well, but the more mainstream memory names continue to pull back. Under the hood, though, tech still finds new themes to keep chugging on. So we saw TSMC overnight trade really quite well, and you're seeing that strength in Taiwan as they are supposedly being able to increase foundry prices into 2027. So the tech team remains very healthy. In Korea, we have double-digit moves on AI-driven battery centers. This is a new thing, building the energy infrastructure around AI. So we keep going down this technology curve, finding new plays. But at the headline level now, gains are looking a bit stretched.
Gains are looking a bit stretched. We have a bit of a hawkishness from the central bank as well. I mean, the currency is still weak, though. What's going on in Korea here when it comes to the won?
So Korea is a bit of an interesting case. You do have the currency strength from exports, which is the traditional measure of EMFX strength, right? These guys are doing so well on the stock market, though, that it's becoming a weight on the FX. People have to keep selling Samsung and Hynix to maintain their portfolio weights. You cannot be 60, 70% Samsung Hynix. If they were not hedging that, that is where you would be right now, given the size of those stocks. So that relentless foreign selling pressure is one headwind. The second headwind is obviously the oil and gas importing, and not to mention the chemical and jet fuel. So Korea is one of the biggest jet fuel exporters in the world, and they're struggling to meet that demand now.
So this partly answers the question of how, if you believe that the rally is broadening out, and I think we talked about Korea. For Taiwan, for example, where are we seeing that? And let's say for the U.S. market, how are we seeing this broadening out of the AI?
Right? It was really interesting to see Taiwan pass India, right, in terms of market cap. And what's under the hood of that is the catch-up of everything that is not TSMC. So there have been a broadening of the kind of hardware themes in Taiwan. First, we did the PCB names, which are like kind of the component names. Then we did servers. And now we're into like all the way back to the future in the sense of like really simple chips, analog chips that kind of control components and stuff like this. So Taiwan's big engineering ecosystem is really coming into play here. And the entire country is starting to benefit from this AI capex cycle.
We continue on that story. I want to bring in Julia, because we've been talking about this big IPO that was just announced here. CXMT submitted its IPO for registration after getting that approval from the Shanghai Exchange. Julia Ferretti, our Asia Equity Capital Markets reporter, is here to tell us a bit more about, the significance of this IPO. The timing of it certainly has been quite perfect as well.
Yes, definitely. It couldn't come at a better time, pretty much. And in terms of the significance, it's obviously a huge IPO. It's going to be mainland China's biggest IPO in 4 years. Is going to be Asia's biggest listing since CATL last year in Hong Kong, which was $5.3 billion. At the base size, we're looking at around $4.3 billion for CXMT, but it could go up to over 5, depending on the over-allotment. And given the likely demand, that's quite a likely scenario. But it's definitely coming at such an opportune time, effectively. We've seen a global shortage of chips, which has pushed prices of memory to unparalleled heights. We've seen that then reflected in the share prices of companies like SK Hynix, Samsung, Micron. And obviously this is a national champion for China. And it comes obviously in the whole context of the tensions with the US and the whole rivalry over AI. So it's a key one to watch.
This is player number 4. In the memory space, right? So SK Hynix, Samsung, Micron, we talked about that. What is, perhaps asking the obvious, what is demand likely going to be like? And is this company risking even at a conservative multiple being valued among the world's most valuable companies, I think is the other question here too.
The demand is likely to be, there's really no reason to believe that it wouldn't be extraordinary, frankly. We've seen other IPOs in the whole AI supply chain in Hong Kong and elsewhere just do extremely well. Chip maker BRN, which listed last year, that's gone up more than doubled. The AI model makers in Hong Kong have done extremely well, going up 1,000% in some cases. So for a company like this, which is such a key part of China's strategy for technological self-sufficiency, there's likely to be a huge amount of demand.
Yeah, I think one analyst was saying this is the reason why China has been able to even get a foothold in DRAM, Your take on what demand would look like for a stock like this?
Well, you've heard from the China appliance makers how they're struggling, right? Lenovo was there, Xiaomi was there. The EV sector needs a lot of memory, and this is memory that Samsung is not going to make for you. They just don't have the capacity. Hynix has given up on the business entirely, right? So the fact that they are straddling the kind of normal memory and the more advanced memory is really good timing for the Chinese to kind of reduce this supply chain bottleneck and keep its manufacturing and export growth hubby.
Yep. That whole self-sufficiency theme. Thank you so much. That was Julia Ferretti, our Asia Equity Capital Markets reporter, and of course, our markets reporter, Anthony Stevens.
Right. Coming up, we're live at the UBS Asia Investment Conference with their Global Wealth Management Asia Chair. Amy Lowe will be joining us in a couple of minutes as Hong Kong overtakes Switzerland as the world's top offshore wealth hub. And later, we're going to be speaking with the DeepZero Chair, Grace Huang, following the company's blockbuster Hong Kong debut yesterday. That stock was up more than 260%. And we are counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show. Good morning. Welcome back. Let's get through some of the stories that we're tracking at this point as it pertains to Hong Kong specifically. Now, Hong Kong banks are said to be tightening scrutiny over clients from mainland China after Beijing launched this crackdown on illegal cross-border trading. Now, sources say some have suspended opening investment and wealth management accounts for mainland residents, and we're told Hong Kong regulators have now instructed banks to ask clients to confirm funds for investment accounts do come from outside mainland China. Now, this new report says Hong Kong overtook Switzerland in 2025 as the world's largest cross-border wealth hub. Boston Consulting Group says that this is being driven by an influx of capital from China and a resurgent local market. Now, the report also says the wealth accumulation gap between the two sides here will widen to nearly $600 billion by 2030. Yeah, perfect time to talk to our next guest at the UBS Asian Investment Conference in Hong Kong. Our Chief North Asia correspondent, Stephen Ingles, is with our next guest. Focusing a little bit more on wealth here this morning, and really Hong Kong, the fact that they've overtaken the likes of Switzerland as an offshore wealth hub could be quite telling here what the outlook is from Amy Lowe.
How did you guys know I was going to start with that story? That's fantastic. And Amy's smiling here with me. Amy Lowe, UBS Global Wealth Management Asia Chairman. So, Hong Kong's back, right? Tell us some of the anecdotal numbers that you've seen with family offices, global wealth managers coming back to the city. Now they're the number one, surpassing, the domiciled home of UBS is Switzerland, but Hong Kong surpassed it last year.
Yeah, first of all, thank you so much, Stephen, for coming here. Indeed, it's very strong momentum. If you look at our AIC, it's at full swing in Hong Kong.
How many delegates here?
4,500 participants from 38 countries and 400 companies joining with a total combined market cap of over $1 trillion, $10 trillion. So that's significant. So you can see the kind of a momentum is really coming back here.
What do you think the secret sauce is? We already know, of course, Hong Kong's been a global international hub, but it's been a rough decade or so, if you will, for Hong Kong. They've had a number of different regulatory improvements here to attract. Obviously, the stock market has gone gangbusters with tech IPOs. But can you nail down to what really is the reason that Hong Kong has surpassed Switzerland to be the number one wealth hub in the world?
I think both Hong Kong and Switzerland are the world's important wealth management hub. And for Hong Kong, obviously, Hong Kong is a capital market hub. As you said, the IPO, the capital market activity certainly is very helpful. And we still have 500 companies lining up. And I think in the last few years, what the government has been doing, and also with all this different support scheme, also create a very good environment for all the setup of the family offices. I think in addition to wealth management, as the chair of the Hong Kong Private Wealth Management Association, we have also seen over 50% of our associate membership growth, meaning a lot of the asset managers are also coming in. So you have also seen a lot of the asset manager, Jane Street, Millennium, Pond 72, they are also expanding their offices here. And so I think it's both the asset and wealth and also the capital market activity that creates the kind of momentum.
Well, the single-family offices in Hong Kong have grown 25% since 2023, now 3,384 of them. How have you seen the chessboard with geopolitics, war in the Middle East, how is that changing and sort of leaning towards Hong Kong? Have you seen more Middle Eastern money move to places like Hong Kong and Singapore?
Now, Hong Kong is a super connector, and UBS obviously is also a super connector. And being a super connector is also very important to be value-added super connector for China, because a lot of them also want to look at the opportunities in China. So, for example, like this forum, we created the Wealth Forum whereby we have a delegate from Middle East, we have a delegate from Latin America, and also a delegate from Europe coming here with almost 1,000 participants. And we have, in addition, a global family office summit in the AIC. And you can see the interest from different parts of the world coming here, because I think if you look at the investment environment, I must say it has improved, especially compared to last year.
But the regulatory environment has also tightened. You knew I was going to talk about this. Momentum, how is it affecting wealth momentum into Hong Kong? Because, again, there's been more recent crackdown, I think they announced on Friday, on illegal brokerages and funneling money. And China's really worried, always worried about capital outflows. And, of course, the IPOs have been booming, as we talked about. How is that impacting how you attract your wealth clients and onboarding new clients?
Now, fundamentally, if you look at all those regulatory change, they primarily mainly target on the licensed and regulated activity. And for UBS and also for all the members bank within the Private Wealth Management Association, we are operating under a robust compliance kind of framework. As a matter of fact, the industry also welcome all this regulatory change so that you can direct the investor into a compliant regulatory kind of official channel, be it Stock Connect, QDII, or Wealth Connect.
Now, Iqbal Khan, the Asia Pacific head here, he said absolutely onboarding of new clients has slowed down across the industry. It seems like Hong Kong, though, seems to be a bit of an aberration, but Hong Kong banks are, in the reporting in Bloomberg today, are ramping up, scrutiny, if you will, of mainland Chinese clients opening of savings and investment accounts. How is that impacting you?
Oh, I think the industry also realized we need to also have a kind of efficient but compliance kind of framework for onboarding clients. So it's how we also strike a good balance there and not cutting the corner. Has to be compliant. And I think that's where the AI and technology can help, because, for example, at UBS, we also invest large scale on AI transformational, not just on the front, but also on onboarding, having the agentic agent to help us to do all the KYC, AML.
Well, Iqbal mentioned that yesterday, but he didn't go into details. How are you employing that to deeper scrutinize the source of wealth of these clients, which I think is a big issue?
Oh, as I said, it's leveraging on all these AI agents in order to help with the KYC, with the AML, and so that we can also give more capacity for our CA, for our client advisor, the bankers, to deliver a better client experience.
Right.
And when all these documents and the process come in, we can also streamline. So I am seeing much improvement. And on a regular basis, as the chair for the Hong Kong Private Wealth Management Association, we still have the dialogue with the regulators to how are we going to further streamline the process to make it efficient but compliant.
Now, I have to squeeze in one last really quick one because we're running out of time. But obviously in February, you said you're going to be hiring about 50 wealth managers in Hong Kong. Do you need to also now or where are you on that process? And are you going to start hiring AI experts as well?
We are on track. And while obviously we are investing in AI, but at the same time, this is the growth region. So we continue to hire. And when we hire, it's not just in Hong Kong and actually in Asia Pacific, because Asia Pacific is also an important growth region for UBS.
Amy Lo, thanks so much. Always having us here at your Asian Investment Conference 2026. It's absolutely crowded here, guys. David, I'm going to send it back to you.
All right, yeah, slumming it there at the Four Seasons, Steve. We'll be back with Steve in a moment there. Lots of conversations coming through there with head of APAC Product Management, Niall MacLeod, joining us as well there with Steve and the team. Lots of conversations taking place. We're also going into the opening bell here, about 8 minutes away, and the early indications are like this. Lots more ahead. This is Bloomberg.
Your agenda here today, we got some earnings in focus, including some of the likes of the EV makers. So XPeng, Li Auto are set to report. So does Link REIT later today as well. We'll talk about Lenovo and really the technicals and what that stock has been doing. Parabolic really here in the last couple of sessions there. Southbound selling is certainly one thing we're tracking here today. And it's once again going to be that hardware versus software trade and the AI side of things. We have some trade data, renminbi strength as well. We've been talking about that. And this 10-year CGB rally that continues. And we've been talking about these yields are basically at near 1 year lows.
Yeah, I think we are back to levels we hit almost close to levels of last August. I think this is something to track, obviously, given the session today. And we talked about Lenovo here. What are we doing in the early goings here? So 3-day rally, 45%. So just about everywhere you look does point to the fact that just to differentiate, of course, the sell signal could be different from what the technicals are showing, right? But every single, whether that's momentum or trend oscillator or index or measure, is pointing to this one actually being quite extreme, right? So you have here what the benchmarks, and above these benchmarks, you tend to get conversations around overbought conditions. And every single one, it's not just above, it's substantially above on a weekly basis at that too. Now, just how this looks in the form of a chart, and a lot of this actually goes, so we haven't seen levels like this going back about 3 decades, right? So if you just want to get, and I could add more indicators here that would point to the same thing. If it looks like a dirty version of your mom's spaghetti, that's what it is. And every single thing, because of this vertical rally we're seeing here at about $19, is pointing to the fact that we are overbought. Whether that is a sell signal to you, I will leave that for, of course, our audience to decide for themselves.
You gotta move away to show. Yeah, there you go.
Yeah, it's
what a chart.
Everything is just yeah.
Okay.
Pointing up.
There you go. That just goes to that show, right? The re-rating around this stock has just been completely changed. The narrative
over 3 days.
Being a PC, company to something that is more about AI. So certainly something to really contend with here, of course, as we count down to the market open. Your pre-market is looking like this in the Hang Seng here right now. So following the region lower here, we're seeing declines about 0.4%. HS Tech is also selling off here. You take a look at what happened with PDD and really the results there. The e-commerce space might be seeing some pressure here today. 677, though, still some strength holding for the renminbi here this morning. We're watching likes of Kuaishou there, beating estimates there. The stock, though, is down some 2%. The open is next. This is Bloomberg.
Welcome back. You're watching the China Show, counting down to the open of cash markets here in Hong Kong, in Shanghai, and in Shenzhen. Not a very convincing leads. I think we're looking at a lot of stocks. Platform companies are going to be very much in focus, particularly e-commerce.
Yeah.
With that print that came out of PDD.
Yeah, I
which
mean,
is of course Temu, but yeah.
It continues to show how competitive the e-commerce platforms remain to be, and really the domestic consumption story really hasn't improved that much. So certainly that's going to probably weigh on some of these e-commerce China tech plays here today. And then of course this whole news of CXMT is set to list on the starboard certainly is going to be quite interesting for the whole SMIC, Huang Semi, the semi-domestic space. So certainly, but today Asia, mind you, is taking a bit of a breather across the board. So certainly one thing, with the exception of Taiwan, I think that's the one that's still standing out here today. But there is, maybe some signs of this whole Iran war. There are some doubts lingering now, even from President Trump, about this deal and whether that does, in some way add to the Strait of Hormuz reopening. So that in itself is, you're seeing oil markets after, we went back to below 90. We're slightly above that here right now. And that really is leading to a bit of sapping in terms of risk sentiment here today. Onshore markets are looking like this. CSI 300 is well below that 5,000 threshold here. We're down about 0.5%. And we're watching, of course, the CGB space, as Dave has talked about, right? We're at 9-month lows for some of the parts of the yield curve right now. And we continue to watch what the chip space does. So Capricorn Tech is doing quite well. There you go, 2% gains here. I guess the CXMT news is certainly lifting the sector once again, just given that this is one of the national champions that is set to list and really join in on this semiconductor trade. CATL is doing okay here today. We're watching, of course, the likes of big cap like Kuiqiao Maotai, though, is heading the opposite direction. Medea Group, so the consumption space continues to underperform. And we're watching Hong Kong. Right now, we're seeing Hang Seng lower by about 0.75%. So you are seeing most of big tech is in the red here. We're focusing on the e-commerce space, right? So what PDD says after that revenue miss there on their earnings. So Meituan, there you go, is down some 3% or so. Baba is down some 1%. So certainly it continues to be a down arrow story for some of these platform companies that, as much as they want to talk about AI, the core business continues to show soft spots here as well. Tencent is lower by 0.6%. Let's check on how the chips are doing, just given the news when it came to CXMT. And, certainly this has been really a stellar, really week for some of these chip stocks as well. And you are still continuing to see them extending those gains here. There was also that ByteDance news, right? So it's a private company, but they're talking about weighing the capex of as much as $70 billion in this whole AI push. You add that to that partnership announced with Qualcomm, and certainly that is, according to our sources, that certainly is, lifting the sector here a little bit as well. TSMC also with those news about that bonus bump potentially could add to that. But yeah, everything but more threads here today seems to be doing better. Let's take a look at Kuaishou. When it came to the earnings side of things, that was one thing to watch. So they did beat expectations when it comes to the AI side of things. The sell side says that video push is gaining traction. So that's one thing to look out for. This is the video editing app Kling. But then again, a weak macroeconomic environment may actually hamper its e-commerce and live stream businesses. So that's also one headwind to deal with as well. DeepZero, that's the one yesterday, right? One of the three that really surged in its listing debut. This is, of course, that AI application on what helps you when it comes to ads and marketing. Yeah. So once again, kind of showing the application side of things that China really has, and really we continue to see gains here this morning.
Yeah, and the boss is going to join us in a couple of minutes to discuss really among the clients, I believe, Gucci and the like. Right, okay, we have more information now on what now appears to be a solid hawkish hold coming out of the BOK. So the decision was to keep rates unchanged at 2.5%. It was not unanimous because 2 of the 7 members actually called for a rate hike. Now, when you look at a dot plot over the next 6 months, here's what's interesting. Only 2 of the 21 dots think this is going to be unchanged at 2.5%. So in other words, we are just debating how high rates how much higher rates could rise over the next 6 months. And you take the most hawkish part of this dot plot, which takes you all the way up to 3.25%. That's 3 rate hikes from current levels. The median suggests we'll get at least 2 hikes over the next 6 months based on the projections of the dot plot and based on obviously currently where we are in the repurchase rate at 2.5%.
Yes. So there you go. You are seeing this sort of recalibration from the BOK himself, that they do need to maybe telegraph that these rate hikes are coming. It's very similar to what we heard from the RBNZ yesterday, which was also a split vote. It was 3-3. 3 of which advocated for a hike as well. This is a 2-7 sort of voting. So certainly there is among the committee members themselves a bit of a division here on what to do about these energy prices, right? But the question is really, is this starting to be, you're starting to see this be more entrenched, right? Beyond just the energy space. And with Korea, given this whole AI boom, they're dealing with signs of overheating, not just when it comes to energy prices, right?
Forget about rate cuts. Forget about rate cuts. And you're right. It's not just Korea, right? This is a conversation that's happening not just across the region. It's happening in Europe. Perhaps it's a conversation we need to be having in the U.S., given the diverging trends of 2 fairly important inflation indicators there, right? So this is something we'll pay attention to, of course. And this time in the next hour, the press briefing will further unpack, of course, the thinking here around this. But it's looking like, based on the current projections, 2 more hikes, at least here, based on that dot plot. All right, let's. Why don't we go to a break, and we will have lots more conversations coming through here on tech and everything in between. Lots more ahead. You're watching The China Show. Right, welcome back. So we're covering 2 conferences today. One is, of course, the UBS one taking place here in Hong Kong. The other is Beyond Expo that is also underway in Macau. And we're all looking at all things. This is really on the cooler side of the tech spectrum. No offense to the guys at UBS. You are also cool here. But do you have smart glasses and AI integrated wearables there is my question to you guys at UBS.
It's hard to beat that, right? As if those are your core themes of this tech-focused event. Of course, we're zooming in on a company called right there, Even Realities, which designs smart glasses with augmented reality displays. Let's bring in the company's co-founder and CEO, Wang Li, who joins us now. Wang Li, it's great to have you on the program. I have to say, David and I, we have tried your glasses on before. It was at a conference, and someone was wearing them, and we asked to try them out. And we were able to kind of read live translations on the lens, and it was just very cool for all news readers and anchors like ourselves, Wang Li. Tell us a bit more about sort of the use factor for all this as well. Who is your target customer, and really how's the outlook for the industry?
Yeah, thank you for having me here. And yes, our strategy is to build smart glasses that people can actually wear every day. As you already tested out, and also I'm wearing this, we believe the next phase of computing is not start from this very bulky headset, but with lightweight eyewear that fits naturally into the daily life. So for us, the growth comes from the 3 things: the better hardware for sure, and also more useful AI experience, and also broader distribution. We are focused on products that combine optical clarity, especially for the prescription wears, and also comfort, battery life, and also discreet design. And also for the business is strong because I think right now people and consumers are already shifting from the interesting gadget to practical wearables, especially for productivity, like other really practical features, and also real-time information. So that's where we are here, and also we are launching the glasses. The first generation is around 24 August, and last year we have the second generation. And also right now we are, although still early in the category, but apart from our user website, we already have more than 500 global premium optical shops, including in Hong Kong, including in Singapore, in Japan, in a lot of European countries. So apart from that, we are also grow really quickly in the consumer electronic shops, like the MediaMarkt, Fnac, Yodobashi in Japan. So I think for us, the interest from consumers and the market is really grow really fast. But we need to do the product in the right way.
Right. It's a newish segment. It's new, but it's not very, very new. And there are lots of players in the market, as you know, Wang Li. So I'm curious, what do you think sets you apart? What's different about your product lineup than what's available in the market?
I think the market right now is the competition definitely is increasing, But definitely there are, three paths that different companies are going for. The first one definitely is camera glasses, and also definitely Meta is investing by far the most in the market. And also the second category is the display glasses as well in the market. And third one probably is the hybrid, one that both have the camera and also display together. But I think for us, like the people that are wearing camera glasses, they already arise a lot of concerns about the privacy, about their social isolation kind of thing. So we think that the biggest challenge for all the glasses that are there for the everyday definitely is still the comfort, battery life, privacy, and also optical performance, and also prescription support, and finding use cases that frequently enough to become really habit. So for us, like camera glasses may appeal to some consumers, but they also create privacy concern that I said. Well, the vast majority of tech giants, they are right now focusing on the capturing, which means mounting camera on people's face for filming or for social isolation. They are not only facing, I think, a massive privacy reckoning and also legal lawsuits, but also overdrawing the public's trust. So for us, we believe the glasses in everyday life should be utility of information, helping people deal with their daily life, daily work. So by removing the redundant cameras and also focus on discrete display and information processing, we don't report the user's past. We only empower their present. So yes, I think computation is increasing, but the category is still wide open because we have different the paths of the roadmap.
The path to the roadmap. It's interesting, right? The real use sort of case for these smart glasses is not about novelty anymore, as you say, Wang Li. I think Google was the one of the latest that unveiled these AI glasses, is saying they're close to an inflection point in this market of mass adoption. Are you starting to see more mass adoption in the space, and what's going to get it there?
Yeah, I think for the mass adoption, first of all, definitely the product it needs to be really catering to the consumer's needs in their daily life. But for the needs in the daily life, definitely we do not want the cameras to have like shot filming the others every day, every time, right? Even though the camera is not turned off or turned on. So I think for the real time assistance because it's a variable, so it can help you with your real-time assistance. For that part, definitely we need context, we need AI, we need the teleprompter, translation, navigation kind of real practical features to help consumers to shift their graphic UI UX interaction with your phone, with your laptop to a more conversational-based UI that is really depending on the development of AI and agentic AI. And also, I think for the mass adoption, definitely apart from the product itself, definitely the prescription service offline and also the distribution channel offline. For example, the optic channel and also healthcare channel that offline will help to because people can actually feel the product, not seeing that from online from other videos, so they can actually feel the product and then buy them if they have the really practical needs. So I think in that case, definitely the channels ready and also the product is evolving, right? So we need to evolve in the right way, not to grow trust. Trust, I think, probably will be the biggest issue since it's a new category and different companies want their different agenda developing all the glasses or all the wearables out there.
Wang Li, very quickly, please. Are you raising money? Any plans to list? What is that separate path looking like for your company?
Yeah, we started this company in 2023. So right now we already are unicorn status valuation in terms of valuation. And I think for us, we really focus on the product evolving development, and also we have the global market selling really fast and really well. So for us, I think that being said, also we already have the 1 billion valuation, but we do not go out the way to broadcast valuation updates as often as a lot of other companies do, because at this stage we are far more focused on the product roadmap, than on playing the funding headline games. So for us, I think if we're doing the things right and build the right experience for our customer, the numbers will follow naturally in terms of the fundraising and valuation. But for sure, I think why investors choose to invest in us and having backing us for this journey, because I think in their opinion, it's the same, that we are the only pair of glasses they want to wear in their LP meetings, in their meetings with entrepreneurs.
Yeah, I mean, we only have two eyes. We'll watch this space. Wang Li, thank you so much, co-founder and CEO of Even Realities there out of Beyond Expo in Macau. In fact, we'll have more coming through there with 3C AGI Partners taking part in the event as well, and the founder and CEO joining us in a couple of minutes at those times on your screen. Stay tuned for that. Lots more ahead. This is The China Show. Okay, welcome back. Certainly nothing but zero here. Beijing DeepZero up, I think, 200+%. We're up a further 25% today. Joining us here on set exclusively is the company's chairwoman, Grace Huang. What do you think of your stock price?
Wow, I'm so excited to see how the market reacts to our IPO, actually. We have been in the market for 17 years. You can imagine, we started 17 years with the vision of using AI to help enterprises. But nobody believed in us, right? So I think right now the Gen AI, actually the large language model, makes everybody excited about AI, which to us is really already third generation of AI already in application. But I think the market right now is really everybody recognize the power of AI, and everybody recognize the monetization opportunity for the AI to help enterprises. So. I think yesterday I was at the IPO event and I said this is the best timing forever for us. Yeah.
It's about using AI in terms of marketing and ads. I'm just wondering, tell us about the problem that you're trying to solve.
Yes, that's a very good question. Actually, we started by defining the question. I'm coming back, P&G and McKinsey background. So we're not a technology-driven setup company, but rather we are looking at enterprises or brands typically, they want to make a lot of decisions, especially for B2C, to the consumer brands, right? So they want to know, what is the best timing to do the advertising, what is the best content, how I should recommend my product to different customers to generate better cross-sale opportunity. What is when the customer comes to my store, how should my salesperson interact with the customer so that they can feel much more personalized experience so that they can convert better? So all these questions, if you look at that, all these questions can be very, very difficult, on the individual level and on the enterprises level. But those decisions actually determine the very much the market or the value of the brand and how much revenue they can generate, how much profit they can generate. So those are the most difficult and close to money decision, I would say. So that is really the decision. That is the hardest decision we want to help enterprises to solve with the AI. Yeah.
Does it supplement the sales force, complement their skills, or does it replace them?
Yeah, I think that's another good question. Actually, in China, a lot of our clients, most of our clients are multinational clients right now, and they're using probably Salesforce or Adobe, Marketing Cloud, etc., or Google, etc., in the rest of the world.
Right.
But in China, because of the ecosystem, especially the digital ecosystem, it's very different. So we never say we are Chinese version of Salesforce or anybody, but we are exactly trying to solve similar problems, but with slightly different emphasis, I would say. We are very much focused on the data and intelligence. Especially, we're not doing anything more what we call SOP driven, CRM, specifically CRM management. But we are helping them to do better CRM communication and operation. So that's slightly different. But we are largely in the same era. Yeah.
You said when it comes to this, the proceeds and what you're going to do with them, AI, R&D, sales expansion, or strategic acquisitions. What are you prioritizing now?
Yes, I think M&A has been always been our dream, to expand the company. If you look at enterprise service company in the rest of the world, they have been using M&A very fluently. Most of the company has over like 10-ish M&A. But for us, we have been organic growth in the past 17 years. So we have been always set a vision of using M&A to accelerate growth. So I would say like after the IPO, M&A is going to be one of the largest investment or one of the strategic growth engine. Of course, expanding like R&D and AI talent acquisition and sales network is definitely like the bottom line of our growth strategy. Another thing, we are expanding to the overseas market.
Yeah.
That's another big, exciting opportunity for us because a lot of Chinese companies actually are now expanding to overseas market, and they really need somebody who understand the culture, who understand what the headquarter sort of needs, but as well as the international capability and AI capability to help them to expand to other markets. So that's another exciting opportunity for us. Yeah.
So what kind of assets are you looking to acquire? Is it technology? Is it a competitor? Is it a peer?
Right. Yeah. So we are in the past typically like to be or enterprise service company or enterprise software company acquire targets with product and customer. But right now with the AI coding, we are actually change our strategy. So we are very much focusing on targets or assets with very solid client base. We don't need too much investment or M&A to buy products because we have very, very fast product growth, like development right now with the AI coding capability. So we're looking at companies with a good, solid client base. Yeah.
In terms of the international expansion, then, what is the strategy right now, and what markets are you looking at?
We are looking at. We have already set up like international business in London, US, Hong Kong, and Middle East. But it's more for like inbound business. So we have some already like local interaction with the local brands. But right now, if we're looking at overseas expansion, like what we call outbound, the strategy number one, of course, is as I said, like we are working with the large Chinese enterprises who want to target overseas market.
Yeah.
Number two, of course, we want to use the AI as the core weapon. Yeah.
Grace, we got to leave it there, but thank you so much.
All right.
Grace
Thank you.
Huang, chairwoman at Beijing DeepZero, joining us here in our Hong Kong studios. Another check of markets here right now. We take a look at when it comes to risk assets. Are pressing the pause button at least for today, but continue to see CSI 300 down some 1%. This is Bloomberg. Welcome back to the China Show. A look at the CSI 300 half hour into the session here, and we are seeing the shares under pressure here today. We're down about 1%. Offshore China also seeing a similar picture here. But this is really against a backdrop where you're starting to see a little bit of a pause in this sort of chip rally and the like, and you're starting to see the likes of when it comes to Korea, that's slowing down here, and really those BOK lines coming through here this morning, Dave. The hawkish turn that central banks are turning to now are maybe starting to weigh on risk assets a little bit here and starting to worry investors a bit.
Yeah, take my hawkish hold and handhold it all the way up. So in a few minutes, we'll be taking you straight into the live briefing, which is going to be interesting because this was not unanimous. There were 2 of the 7 that expected to hike. That wanted to hike interest rates, unexpected hike interest rates, and the dot plot now suggests that the path is likely higher. On the median, we're at 2.5%. This likely goes to. Could we show the pie chart, please? So we're at 2.5%. I wouldn't say majority because it's still a minority, but off the 21, 10 of the dots actually project us to getting to 3%, which is 2 rate hikes. We have a further 2 that takes us to about 3 rate hikes. So over the next 6 months. And so we have 4 meetings scheduled over the next half year. So if this is correct, that's 1 at every other meeting, 1 hike. And they've also bumped up some of their forecasts.
Yeah, so I think what economists are saying that this hawkish tilt is certainly one thing that we need to contend with. I think now they're even mapping out the BOK could actually hike as soon as July. So that is sort of what we're hearing from similar central banks across the region as well, right? And they also did bump up growth and inflation forecasts as well. So certainly that's one thing to deal with. It's interestingly enough, though, when it comes to Korean won, it's not exactly strengthening against this hawkish sort of commentary here. It continues to actually weaken in the face of all this, which is quite interesting. Let's bring in our MLive macro strategist, David Savage. He's with us right now. What did you make of the statement from the BOK?
I think this is really interesting because I think it has ramifications beyond just Korea, right? So, as you said, they raised the inflation forecast as we expect, but growth forecasts were raised quite significantly. I think about 2%, just this year, 2% to 2.6%. I think that shows you beyond Korea, you have accelerating inflation and accelerating growth, right? So if central banks are raising rates because you have inflation, yes, accelerating, but growth is also accelerating, I don't think that's going to be the catalyst to reverse this risk rally in equities. Yeah. I don't think that's going to be it. And that has ramifications if we look back to the U.S., right? If we see the Fed we've already seen markets start to price towards a hike later this year. If we start to actually see the Fed communicate to that, again, that'll be on the back of accelerating growth. And so that's probably negative for bonds, but that's not probably going to be your catalyst to reverse this rally.
Just to bake in the lower prices on oil we've seen this week so far. I mean, we've yet to break 90. That's, I guess, the next level to watch. But assuming oil prices fall further from here, that's clearly a good thing. But how does that then impact the next 6 months?
So first of all, I think it's been interesting to me that we haven't seen that much of a pickup for equities beyond sort of the tech names, even though we've seen oil come off here. So, perhaps equities aren't, reading through as much optimism as we're seeing in sort of front month crude prices come off. I think, again, this comes back to sort of the bimodal risk profile markets are facing, particularly equity markets, right? There's so much momentum behind equities. There's flows behind equities, and volatility remains fairly benign. And, of course, earnings are just continuing to accelerate. And so, yes, if you had oil kind of come off even further, if you had some sort of arrangement, some deal that had energy flows coming out, that could be a real positive catalyst for equities. On the other side of that, if we see oil go back above 100, back to 120, that's a huge, downside risk. So that's kind of the two outcomes equity markets are having to wrestle with. And so I think that's interesting to see where if you take, Asian equities back to pre-conflict, since that point, only the tech sector is positive. It's up something like 35%. Every other sector is still negative, right? So yes, we've seen some strength in equities broadly, but again, if it's not tied to the AI trade, it's still languishing under high oil prices.
Okay, that's going to be pretty interesting moving forward here. David, thank you. We have more here in terms of lines crossing with Iran. So we are hearing from Scott Bessent here this morning. So he's talking about the Gulf Strait Authority action targets Hormuz tolls and the Treasury maintaining maximum pressure on Iran. There's been some mixed sort of signals here on really what this, deal would look like here right now, whether, what the Strait of Hormuz and the state of that is looking like here. And they're talking about tolls. Is the Strait of Hormuz going to ever look the same again? Is certainly one question as we, see that the two sides continue to negotiate. But also we're starting to hear signs and reports of strikes as well between the two.
Derek Wallbank is with us to fill in the details and the gaps here. Our senior editor joining us with the latest here. Derek, do we have people are trying to figure out what the arrangements will look like around the Strait, I guess, in the future? Do we have a better idea of what that is currently?
Well, David, what we've got right now, the short answer to your question is no, not really. But what we've got right now is the U.S. and Iran both sort of trying to lay the architecture for what something like that could be while they have failed so far to come to an agreement on this. Quite frankly, this is one of the last big sticking points, and it's a red line sticking point, certainly for the United States, which says that Iran cannot have operational or de facto control over shipping in the Strait of Hormuz, and Iran not wanting to give up this sort of newfound power that it has. So two things happening within the last couple hours that are both worthy of people's attention. The first one is that there was a sort of military back and forth early in the Asia morning, overnight, Iran time. The U.S. striking Iranian military stuff. You're talking about, according to a U.S. official, strikes against 4 Iranian one-way attack drones aimed toward a commercial vessel. Also, a strike hitting a drone launcher on the ground in Bandar Abbas, which is right next to the Strait of Hormuz. So that's part the first. Part the second is the sanctions effort that you just described, right, against Iran's so-called Persian Gulf Strait Authority, which is described by the Treasury as a, quote, new attempt by Iran's Islamic Revolutionary Guard Corps to monetize its campaign of state-supported terror by extorting vessels transiting the Strait of Hormuz. Their language, not mine, but you can get an idea of what the tonality is there. Essentially, this is the United States saying, if you're going to try and use your maximum economic pressure to control the strait, we're going to try and use our maximum economic pressure to thwart that, right? And the U.S. had warned that it was not going to sit idly by and allow Iran to tariff this. And so using the threat of economic sanctions does go forward and put, shippers in a bind. It puts you in a binary choice you don't want to make. Option A, you could try, going along with Iran and this tolling idea and play ball there, but subject yourself to U.S. sanctions. And option 2 is you don't move your cargo at all, maybe, or run the risk of Iran trying to stop you.
What are some of the other sticking points? Given this interim deal, given what we see from both sides and their perspectives here right now, what are still some of the lingering sticking points beyond just the Strait of Hormuz and sanctions now?
Yeah, well, Yvonne, I think one of the big things is money. Iran wants some assets unfrozen. They want essentially to get money back. However, that winds up actually going, and this winds up being a very difficult thing. They want this up front. Trump does not want to give this up front. He wants this to come sort of on the back end. But he's also getting a lot of pressure from Republican hardliners, Lindsey Graham among them, who are both close allies and also war hawks, or national security hawks, basically saying, look, don't go along with this deal. Remember, you don't have to look too far back to the idea that giving Iran financial compensation of any form in any fashion, even if it's just unfreezing their own assets, was a key thing that Donald Trump criticized about the old Iran nuclear deal that Barack Obama's administration had in place. And so, he does not want to have that sort of comparison there. He's very sort of sensitive to that on one side, also kind of sensitive to the idea that whatever deal the Trump administration signs on to will be compared to that deal. And a lot of Democrats say that all of the options that Donald Trump is considering are worse than that deal was there. The other big sticking point, though, I have to mention, is simply the economic reality on the ground, right? We're going to get a gauge of inflation tomorrow in the U.S. The survey, the survey that you can find on the Bloomberg terminal says 3.8%. The Fed's inflation target is formally set out at 2%, right? It gives you an idea. You're seeing Americans pay $500 million or more a day on aggregate extra in gas tax, and we just had the Memorial Day holiday here in the United States, and 12 states set their record highs for a Memorial Day gas prices. 7 of those states are states that Donald Trump carried in the 2024 election. So all of this is a pressure point to try and get something through as well. This is why you see Donald Trump sitting there talking at the White House yesterday, or earlier today, our time in the U.S., right, about that he's not going to be somebody that Iran can wait out. We hear from Scott Bessent tomorrow in the U.S. at the White House.
Derek, thank you so much. Derek Walbach, our senior editor, with the latest on Iran. Just ahead here on shows, we're back at the UBS Asian Investment Conference with the head of APAC Product Management, Niall MacLeod, will be joining us for his outlook in terms of what AI implementation looks like. And also coming up there out of the conference.
Yeah, a big one coming up. MiniMax co-founder and president Ye Yiyun joining us exclusively to talk about the company's expansion plans and China's AI outlook.
Right, welcome back. Let's take you straight back now to the UBS Asian Investment Conference here in the city. And Steve is standing by with his next guest. Steve.
That's right. It's Niall MacLeod. He's the UBS head of Asia Pacific Product Management. You're the curator. I know you don't like that title, but you're the curator of this event. Obviously, we are at a very interesting time, a confluence of geopolitical and macroeconomic stresses with the war in the Middle East, but also great optimism towards the transformation of technology across the border and around the world with AI. So what do you think is dominating the discussions right now?
I think, Steve, you've kind of nailed it. There's a lot of different topics that people care about. On the optimistic and the curious side, it's really AI. What does it mean? Well, we've been talking about it for 4 years at these conferences, but every year you come back to new elements of what AI means. And a lot of the panels we've been having here the last 24 hours have been tilting the conversation a little bit more towards what does it mean for society? How are we going to implement this in a fair way? How can governments regulate it? So whereas a year ago, it was really much more optimistic around what are the technologies that are going to work?
What is it?
Yeah. So the evolving conversation, but that's always, I think it's going to be with us for years in terms of how we discuss it.
Well, naturally, I've never met a banker, and I'm not saying your clients here are all bankers. You have a cross-section from many industries, but every banker I meet, they all talk about, bonuses, and they talk about jobs. And jobs has been on the front of mind of a lot of bankers recently, whether it's Jamie Dimon of JP Morgan or others. They're all talking about ramifications of AI on the rank and file, if you will. Iqbal Khan, your boss here in Asia Pacific, here in Hong Kong, talked about those ramifications, but he thinks it's going to be the productivity side and the complement that AI will to the current business models that you have. How do you see it, and how do you see the conversation from business leaders who have to weigh the job side of it and the redundancies versus productivity?
Well, we're already seeing a lot of the productivity benefits coming through. I mean, even, I'm sure you use it, Steve, as well. We can see things just becoming a little bit easier, how you can surface information, how you can join the dots. So there's a tremendous benefit that I think we're already getting, and that's a lot of what Iqbal was referencing yesterday. The conversations we were having yesterday with Kevin Rudd, with Simon Johnson, the Nobel laureate from 2024, who spends a lot of time thinking about how can you augment work, not to just think about the negatives of it, but also the new jobs that are going to come along, the new processes. And it's very difficult, I think, today to forecast what will happen 5 years from now in terms of those new roles. I think I'm right in saying that 60 years ago, 60% of the jobs that exist today didn't exist 60 years ago. So it's very difficult to forecast and think about what those things will be. But it's top of mind in terms of how are we going to shape it? How can society shape it? How can we make sure that it's fair? How can we make sure it augments work? And that's what a lot of the conversations have been about with the thought leaders here over the last 24 hours.
Yeah, I mean, businesses like certainty, right? And right now we're in very uncertain times, not only with the AI, but the geopolitical field with war. I mean, we're already 12 weeks into the war or thereabouts, and there doesn't seem to be necessarily a firm conclusion to that. But yet the negative aspects of it, the oil price shock, I'm sure energy resiliency has been talked about here. That adds a layer of uncertainty, not just the AI and jobs, but the inflationary impact that it tends to be a little bit more sticky.
Yeah, and when we're trying to put a conference on like this, I mean, why do people come? They want to come and see lots of companies. We've got, I think, 400 corporates this year speaking to investors, but they also want that content that you get in the panels. And so when you're trying to, I don't like using that word curate, but when you're trying to think about what are the topics that people care about, it is a combination, as I said, about AI, but it's all those geopolitical issues. And so we were very lucky yesterday that we had Megan O'Sullivan, who's got tremendous insights into the Middle East and energy from her time at the State Department, sharing her thoughts on energy and oil. Of course, how does this feed into inflation and interest rates? And we had our central bankers talking about that. So these are all, it's this combination of bottom-up themes and top-down themes that you want to pull together to give people a very rich sense of what matters.
I think it was Iqbal Khan who mentioned yesterday, and he actually asked me that, do you notice a tone shift as well towards the mainland? Obviously, China is a few years out from COVID. Hong Kong's a few years out from, obviously, the turmoil and the protests we had here. But it seems as though the tone towards China is changing to the plus side as well. The opportunities with the technology. the economy, yes, it still has some domestic consumption issues, but it seems like there's a lot more confidence in what's happening across the border, as what we've seen reflected in the stock market here and the IPOs of their own indigenous innovation. Have you felt that?
100%, Steve. And you can actually quantify this. If I look at the conference 2 years ago, Chinese market hadn't been doing quite so well up until that point. If I look at the number of overseas-based investors that are coming to this conference, last year it was up, I think, 80% from the previous year. This year it's up another 60%. That is demonstrably due to the fact that people have got more optimism, not just about Asia Pacific, but also about China, which is clearly such a massive part of this region, this economy, and of course the market.
And wealth management, obviously a huge part of UBS's business. And we just had that story we talked about with Amy Lowe earlier this morning about, according to Boston Consulting's latest numbers, you might have seen it, that Hong Kong has overtaken your home domicile of Switzerland as the #1 wealth hub in the world. That also tells you about the confidence that we're seeing and the opportunities in the stock market, and also family money, single family offices moving more funds here.
Well, this region, as we know, has been growing faster than the rest of the world for many decades. And as that happens, you're going to get more wealth created. It's one of the reasons this is such an important business for UBS. As of course our home market is as well. So I think it doesn't take a genius to figure out that if the economies keep growing, wealth will accrue, people will need the wealth services, and we want to be here to provide that.
All right, Neil, more than 4,000 participants here. I didn't know they could pack that many people here.
The Four Seasons do an amazing job.
All right, Neil, thanks so much. Okay, I'm going to send it back to you, Yvonne.
Great conversation there with Neil, of course, head of APAC product management at UBS. And that was our very own Stephen Ingles joining us there at that conference. And there's much more ahead at the UBS Asian Investment Conference. Minimax co-founder and president Ye Yun joins us exclusively to talk about the company's expansion plans and, of course, all things AI. All right, taking you those live pictures out of the BOK here right now. That live presser is underway under the new Governor Shin now, talking about the Mideast war uncertainty persists here. And of course, that hawkish tilt from the central bank. They're talking about the oil stability to take time to return, according to the central bank. And really that local growth expansion, why they upgraded their growth forecast, driven by, of course, the chip sector and that boom there. Plenty more ahead. This is Bloomberg.
성장을 봤습니다. 그리고 이제 금융이라는 것은 환율하고 이제 가계부채.
Right, welcome back. Straight back to this ongoing briefing taking place in South Korea. The Bank of Korea, in case you missed it, about 90 minutes back. Not a unanimous decision, held interest rates at 2.5%, although the guidance that's coming through in both the growth, the inflation, and the dot plot guidance suggests that rates are going to head higher. There's still lots of uncertainty around what's happening in the Middle East. It is largely a hawkish hold. Certainly bond yields are telling you that. That's the interpretation of the market. The currency markets are telling you something maybe slightly different.
Yeah, it's interesting. Perhaps the Korean won is not exactly strengthening on these comments, which was complete opposite of what we heard from the RBNZ and what happened to the Kiwi yesterday, right? You're actually seeing weakness in this currency, and it has been an ongoing thing for some time, when even just equity market inflows hasn't really done much in terms of strengthening the Korean won. Perhaps there is still that energy complex, the fact that Korea is, of course, an energy import, that is still weighing on the currency in some ways. But it might mean, I was reading the MLive blog here, our very own Andre Silva was saying, at least it means the currency is a little bit more constructive, because now you can start to see that the rate differentials between the Korea as well as the Fed and the U.S. is now narrowing. So maybe that does bode a little bit better in terms of the prospects for the won moving forward here. But yes, we'll continue to bring you the latest lines crossing through from the BOK. Let's get you caught up with some corporate stories in the meantime. Salesforce shares slipped in late trade after the company's revenue outlook for the current period fell just short of analyst estimates. The leading maker of customer management software says it expects second quarter revenue of around $11.3 billion. Now, that's adding to investor concerns about AI disrupting the software business. Shares of PDD fell the most in a year in New York after the company's first quarter revenue missed expectations. Sales rose 11%, but Morgan Stanley says the results show a meaningful shortfall relative consensus expectations. The disappointing results were partly caused by fierce domestic competition and weak consumer sentiment in China. Chinese memory chip maker CXMT has submitted its IPO for registration after approval by the Shanghai Stock Exchange. The offering is set to raise at least $4.3 billion, rising to more than $5 billion if over-allotment options are exercised. That would make it the biggest debut in mainland China since CNOOC in 2022. And Bloomberg has learned that TSMC's chief executive told staff they can expect profit-sharing payouts to rise this year by more than 30%. A source says C.C. Wei made the announcement during a town hall meeting after employees voiced concerns online over TSMC's incentive plans. The chipmaker is among the prime beneficiaries of the AI boom, facing increasing pressure to share the wealth.
Taiwan is booming, and it makes sense Taiwan is booming. 4 years ago, 5 years ago, NVIDIA was spending about $10–15 billion a year in Taiwan. Now, we're spending 100, going to $150 billion in Taiwan each year. $150 billion from one company alone is going to fuel an incredible ecosystem here.
Okay, well, really where the AI story is being felt quite pronouncedly is in the Korean economy, and I think we're now getting some guidance coming through on what the likely optimistic scenario on growth looks like if the Middle East risks ease early. That's according to the Bank of Korea governor. That growth this year could top 2.6%. We'll have more coming through out of the BOK in a moment. This is Bloomberg. Okay, welcome back. So, a couple of things, okay? So, before we talk about what's happening in Japan, I think it's interesting this divergence we're seeing across some of the platform software/internet names, and perhaps the catalyst today would be the PDD numbers overnight, and that's adding to the woes in this sector, generally speaking. Separately, though, for people looking for a further source of hot sauce on this AI capex spend, the ByteDance story was interesting.
Yes.
Within the domestic conversation in China. It's playing out across these markets, and quite divergent clarity here.
Yeah, when you talk about they're weighing capex for this year to as much as $70 billion, I mean, those are some pretty shocking numbers as well, right? And certainly, does this bode well, of course, for the hardware side of things and the chips, right, that's needed for this whole AI push. So I think that's why, despite the fact that you're seeing Korea sell off here today and a bit of softness in TSMC and the like, China chips are still doing very strong. SMIC is up 6, Huang Semi is up 12. You add that to the CXMT story and how, they basically got greenlit to list pretty soon on the Star 50. There seems to be more, tailwinds here that are crossing when it comes to the hardware and really that space, at least the semi-space in China today. Yeah, well, in about 10 minutes or so, we'll have more details on this Bloomberg scoop, of course, on this doubling, more than doubling, in fact, on the ByteDance capex spend. But before we get to that, just to mention, too, this other part of the rally we're seeing here in bonds, Chinese bonds, and we now are close to this 1.7% handle on the 10-year yield across the bond markets. As you can see, bond yields are on the way down, hence the green color, prices on the way up. In fact, on the 10-year itself, this is how it looks over 1 year. We've now taken out that recent low right side of your screens and now takes the yield back to the lowest level since about August of last year. Something to watch, given, of course, the separate and distinct inflation story that we're seeing in China relative to what we're seeing elsewhere in the world, including the likes of Korea, very pronouncedly today at the very least. Yeah, so Korea certainly, we're kind of dealing with the commentary from the BOK that continues on this hour, this BOK live presser that is still happening in Seoul today. What you're hearing from the new governor, Shin, is they see the need for a rate hike at an appropriate time. He's mentioning about that dot plot, right? That it does show differing uncertainty levels among members, so that it is still, I guess, in some ways split on what those sort of central bank reaction functions are going to be. But it is, no doubt you are seeing this is a central bank that has turned hawkish after setting, rates on hold for 8 straight meetings. It seems like they are laying the groundwork for some sort of tightening cycle now.
Do you know who, you might not know, but just in case, do you know who Mondo Duplantis is?
No.
So he's the world record holder for the pole vault.
Okay.
And he's constantly just breaking his own record. And the question, I think, that goes into what the BOK governor just said, how high can you go? And varying degrees of opinions on how high the BOK thinks they can go, right? And I think right now we're looking at 3% on the dot plot. The appropriate time, we have 4 meetings, I believe, left for the year. Let's get the take now from Bloomberg Economics, shall we?
Yeah, they think that the BOK's decision to hold rates steady came as no surprise, but sharp upward revisions to both growth and inflation projections reinforce their view that preparations are underway, possibly, for rate hikes and that tightening cycle. For more, let's bring in the Korea economist, Hyo-sung Kwon. Hyo-sung, thank you so much for joining us. Quite a hawkish turn that we're hearing from the BOK. Your initial sort of thoughts, sir?
So as you mentioned, that the whole decision was no surprise, but the 2 dissenters favoring hike and also a dot plot pointing to that hawkish monetary policy, and also sharp revisions to both inflation and growth outlook suggests that the BOK stance is more hawkish than expected. So I originally expect that BOK will start raising interest rate in August, but now I expect it is more sooner than that. It will start raising interest rate in July, and then another cut will come in probably August, because the dot plot shows that 10 dots at 3% means that at least 4 members are open to 50 basis point rate hikes this year in 6-month horizon. So BOK seems that pretty much hawkish. It is really ready to hike now.
And so the question now becomes, I'm looking at the dot plot there. The peak on the interest rate in the recent cycle, correct me if I'm wrong, was 3.5%. Do you see any probability that we go beyond 3, we get to 3.5% or even higher?
I think that is possible because, you mentioned about chip cycle and chip boom, right? And think about Korea. The market currently expects that combined operating profit of Samsung Electronics and SK Hynix would amount to over 20% of GDP this year. And, it will grow further next year. And this means that in early next year, workers at Samsung Electronics and SK Hynix will get bonus amounting to around 2% of GDP. And after paying income tax, 1% of GDP will remain as a disposable income for workers at both chip companies. So we can expect that the huge, probably larger amount of that bonuses will flow into asset market, likely to the property market, raising housing prices. It is already happening, that in the chip belt area. So it will raise concerns about the BOK. And at the same time, the wage negotiation of Samsung Electronics can be a reference point or benchmark of unions and other companies. So they might demand that the certain portions of the operating profit as bonuses. We're already seeing that is happening at Kia and Hyundai Motors and Kakao. So that will lead to a higher wage growth this year, so that it will lead to will boost domestic consumption demand and also raising labor costs, which will add to inflationary pressure, so that higher property prices and higher inflationary pressure will make BOK more hawkish and the hiking cycle of the BOK steeper and faster. Yeah, that is possible. So it can go over 3.5%.
And in that scenario, I think that looks like a good thing. Just to reference, the output gap, GDP output gap, according to the governor, is seen turning positive next year. To your point, inflation is really, if not already starting to pick up. just a reference to this K-shaped economy, K not meaning Korea, what does the non-AI part of this economy look like to you?
Yeah, but we have to think that that growth is always has been K-shaped, but the difference this time is the degree of K-shape. So probably K-shape itself doesn't mean much to monetary policy, because monetary policy need to care about the aggregate demand and prices and financial stability rather than distribution. Then BOK need to hike interest rate to address inflationary pressure and to overly accommodative financial conditions nowadays. But we need to address you mentioned the K-shaped other parts of the economy that needs to be addressed by the fiscal policy, right?
Hyo-sung, thank you so much for joining us. Hyo-sung Kwan there, our Bloomberg Economics Korea economist. And of course, we'll lead you to back to those pictures out of Seoul. The Bank of Korea's briefing there as well, bringing the latest coming up. This is Bloomberg.
양극화를 더 심화시키지 않는 범위 내에서 하면 가장 바람직하다고 이렇게 말씀드리겠습니다.
To another Bloomberg scoop here, we've learned that ByteDance may more than double last year's capital expenditures in a bid to lead the Chinese AI market and challenge the top U.S. players abroad. So they're talking now about as much as $70 billion in capex in this AI push. Let's bring in our Asia Tech Managing Editor, Edwin Chan, on more on this as well. I mean, these numbers seem to replicate, or it's similar to what we hear in the U.S., which is quite rare. Do you think so, or do you think that it's narrowing at least?
It's narrowing.
The capex spend between U.S. and China.
I think on the surface of it, it's still a little ways off. I mean, Meta alone is probably spending more than what ByteDance intends for the next 2 years. I guess one thing to remember is this is right now contingency planning. It's a budget, so it could undershoot, but it could also surpass 170 billion this year and next. And I think what it tells us is the scale of ByteDance's ambitions. Again, it's not huge in the context of the U.S. hyperscalers, but it is massive for a Chinese company, and it far outstrips what Alibaba and Tencent have publicly said they would spend. I think it points to their ambitions in video AI and in agentic AI. And, I don't know if a lot of people know this, but Doubao is the most popular consumer chatbot in China.
So, do we know what they're going to spend on? Like, what will they need here?
I think a lot of it is data centers. And, part of it, of course, is for TikTok and Douyin and its existing operation. It's not all going to be agentic AI. But we think the biggest growth component is preparing for the amount of AI compute that they think they will require as agentic AI takes off, especially in China, where I think we've established the AI adoption is well above the West.
Yeah, I mean, it certainly just goes to show the capabilities of this AI story in China as well. What does it tell us about, what does this benefit part of the whole China AI story in some ways? I mean, how do you see this benefiting the whole tech sector if we start to see more of these Chinese, tech companies spending a bit more than they usually do?
I think the immediate beneficiaries may be the hardware manufacturers. I think ByteDance uses a mix of hardware. Just yesterday, Bloomberg broke news that they were in talks with Qualcomm to use some of their ASICs. A lot of it would also be Huawei chips, and those are made at SMIC, and various Chinese supply chain companies that would benefit from more spending from the likes of ByteDance, Tencent, and Alibaba. And I think the ecosystem benefits because the one thing that's common between the US and China is computing constraints. I think as agentic AI takes off, or should I say if it takes off, there will be a huge amount of computing demand that right now companies may not be able to sate.
Edwin, thank you. Edwin Chan there, our managing editor for Asia Tech. Just a note that's really playing out in markets quite evidently today. I think when you look at the likes of some of the foundries on your screens very shortly, 6% on one, 12 on another. The other side is true on some of the platform names, but that's, I guess, a separate story. Just to talk about where we are here in this AI push domestically in Greater China. Joining us here on set is Esther Wong, founder and CEO of 3C AGI Partners, a VC firm focused on the AI theme. She's a former managing director, of course, at Sense9. Esther, very nice to see you.
Yeah, nice to see you again, David.
So what are you most busy with recently? What's taking up most of your time?
Well, in terms of investment, I agree with the guest you just had. So we are a strong investor and strong believer in investing in constraint. China and U.S. have different set of constraints. Obviously, China is limited by some of the export control. So you see that in China, they have a very slightly different topography of what we can invest versus in the U.S. So I would say in general, equipment is one of the areas that China is constrained, obviously. So that's why you see 2 days ago, you have this, Huawei have this, I would say, industry-shattering paper came out on tau scaling. So instead of trying to make transistors smaller, because China doesn't have the lithography machine. So they actually do different stacking. They call it logic stacking. So they stack analog, memory chip, digital together so that they compress the time together. So that's one example of how can China overcome some of these export control measures, right? So that's on China. U.S. also have its own set of constraints. So one of the major constraint of AI ultimately is power. And in that sense, U.S. actually sort of fall behind China because China has been doing a lot of manufacturing for the world for decades. So you see that one of the reasons why the Chinese tokens are so much cheaper is because the power from China in some areas actually almost 1/10 of the power in the U.S. So for China for U.S. to sort of head to head with China, I think power is one of the key areas.
So we get the infrastructure play. What about in China where you see this AI application, sort of embodied AI?
Of course.
How much does the fund tilt towards that and focus on that?
This is a very good point because I think China is uniquely able to benefit from the whole AI usage, AI application, which you have software and hardware. Software is, we talk a little bit about the token, right? So token is consumed domestically, obviously, and also a good chunk of it is actually to export overseas. And that's why you see guys like Minimax, they're doing so well because we are able to export the Chinese domestic made tokens to elsewhere. Now, physical AI is uniquely, China has a great advantage because, again, China was manufacturing center for a long time. So we have literally the most comprehensive hardware supply chain. So I'll give you one example, something that would take GoPro to have one iteration of the next version. It would take 2-3 weeks. It would take DJI literally 1 day. So that difference obviously goes into physical AI as well. So we do believe that now these days, I believe there's over 200 robotics/humanoid companies in China. Some of them went to your show. And I do believe that out of them, you will see the next DJI, the next GoPro equivalent. And you can take advantage of both domestic market as well as overseas market.
In terms of options that you have as a fund, does it look crowded or is the market big enough?
Oh, I think what we focus on is very unique because as a fund, we actually do not touch application. So we don't touch upon the physical AI. We don't touch upon LLM. What we focus on, this is where I felt that there's a lot of, we are in the beginning of this large boom, is how do we fix AI infrastructure, i.e., how do we make a better AI factory that is truly sustainable so that humanity and AI can coexist together? Now, this is because...
What's wrong with it now? What's the premise?
Because right now, we are using way too much power and we're using way too much water. Obviously, the hardware that we have is not the most efficient. That's why you see why NVIDIA actually purchased the Acquihire Grok, because the hardware that you need for training and inferencing is different. And the inferencing is how you and I use Perplexity, ChatGPT, Doubao, that's inferencing. The product hardware is actually LLM, so that's different level. But even within inferencing, there's a nuance. So this is the first time, 2026, is the first time that amongst the use of inference, there's more AI itself uses it than human being. So what do I mean by that? So instead of you asking Perplexity some question, actually for the first time in human history, AI agent actually surpass human as a user of AI. And that has tremendous implication. Everything that we're seeing today, all the infrastructure, most of the infrastructure we're seeing today is based on human as user. And so what happened? You need to sleep, right? You cannot work 24 hours. And for you, timing is not such a big difference, whether it's 1 millisecond faster or 1 millisecond slower. But if AI agent is using AI itself, then obviously latency is other question, because AI will feel every 9 milliseconds of difference. So latency is a must, right? Low latency is a must. And with that causes a lot of the hardware revolution. So why do you see HBM talk about, why the Samsung and SK Hynix go through the roof, right? They become $1 trillion companies. Because when you, as a human being, when you ask, let's say, a question on Perplexity versus an AI agent asks a question, AI agent would use 20 times more memory. Right. Same thing with CPU, because when we are using CPU versus when an AI agent is using CPU, that CPU usage went up 2 to 8 times. So surrounding with that, also when you ask, let's say, Google to do a search versus when you ask Perplexity to do a search, you use 15 times more power. Right. So with that in mind, when AI is the user of AI, everything at the back end needs to be completely revolutionized. And we are at the beginning. As I said, this is the first time in human history this happened. So we're at the very, very beginning of that. So of course, as a fund, we foresee that. And so we have a lot of investment that is on this frontier.
I see.
So one of them being space. I think we talked about it last time.
Data centers in space.
That's right.
Yeah.
So we are one of the earliest investor in this sense. I remember last time when I was on your show, we mentioned that we are about to do a launch. We partnered with SpaceX and we do a launch last year in November. The launch was a huge success.
It's up there now, right?
It's up there now.
Okay.
It's up there now. So we actually have H100 running Gemini in space right now. Wow. And when we first invested in that project, that was over 2 years ago, people thought I was talking about sci-fi. But now, thanks to Elon Musk, right, thanks to SpaceX IPO, people actually come to realization that, wait, data center in space, not so crazy after all.
Not so expensive? I mean, it's still quite expensive, is it?
Good question, Yvonne, because I think, yes, as of now, it is expensive, more expensive than Earth. But I think that but two things happening this year. Number one, as you can see from SpaceX perspectives, there will be Starship, right? So the launch cost has been one of the most prohibiting factor of sending something to space. Now, when we first started the project, launch cost was literally easily, 50,000 per kilo or thousands of kilo last year. But with the emergence of Starship, hopefully in 2029, the launch cost per kilo will go all the way down to a few hundreds. So you can imagine when it's down to a few hundreds, every kind of application can come out as a result, because the cost of failure, or we call it cost of trying, is actually a lot lower. Right. So when something costs so much money to launch, you have to make sure it's absolutely perfect before you do it. But now the cycle of iteration can be a lot shorter and a lot cheaper thanks to Starship. But also secondly, in space, more importantly, in space, you don't have to pay for the land. You don't have to get the permit, which you save a lot of time and money. You don't have to pay for the energy. Think about it, right? Sun is free. Solar energy. Sun is the largest star in the solar system, so it's free.
That's the only one.
That's the only one. And also, as long as you stay in the sun synchronous orbit, basically it's free. So the only thing that you need to worry about is how do you make it scalable, right? Because the space is vacuum. Earth, you can do convention heat dissipation, but versus in space, you do radiation. So that is now being resolved. So I strongly believe that space is happening, whether we like it or not. And also, if I may add, there's, apart from just a commercial element, why space is important, there's also a very strong strategic element. If you look at the war in Iran, one of the first target that was hit was actually the Amazon Center in UAE.
Yeah.
So there is a reason that why space is actually quite strategic.
We got to leave it there. Ran out of time. We could go on all day on this. Esther Wong, founder and CEO of 3C AGI Partners. We have plenty more to come. This is Bloomberg.
Right, before we wrap up the show, and was hoping to end on a positive note, but hence this is the reality of markets today. Session lows as we go into the final hour of the morning session here in Hong Kong. Hang Seng Index down about 2%.
Yeah, I mean, it's really the big tech that is selling off here today. Interesting enough, what's on the other side of that trade? SMIC, Lenovo, still
again.
doing quite well in the face of all this. That's it for us here on The China Show.